Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, with daily insight on the Nasdaq-100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this afternoon, we have Ryan McCormack, QQQ Equity ETF Strategist at Invesco, to discuss weekly trends in the Nasdaq-100. And Ryan, we finally started to see some sector rotation this week, although investors appear to be back into big tech this afternoon, the modern day industrials that make up the Nasdaq-100.
Yep, exactly, Jill, and thanks for having me. A week where QQQ was down and the S&P was up. It's something we haven't seen in some time. QQQ down almost 2% on the week, while the S&P gained 0.86%. To put it in comparison, though, for the year, I think the attention has firmly been on those 21st century industrials with over 20% outperformance of QQQ. We're up 25.14% on the year versus the S&P, which is up 4.38%. And you're right. I think we're starting to see the beginning of some of the cyclical rotation on, what else, the backs of optimism around a potential coronavirus vaccine that we've seen from various places, and also the hopes for additional stimulus from the government. You started to see investors move out of some of these winners, some of these 21st century industrials, into some of the more cyclical sectors, those sectors that have been beaten up. But as you had alluded to, today we've seen QQQ outperforming the broader S&P on the backs of Tesla, which has announced a 5-to-1 stock split ahead of its hopeful inclusion, according to a number of analysts on the street, in the S&P 500 later this month. So, for the week, we saw that rotation, but today, the 21st century industrials firmly outperformed.
I think it's so interesting, Ryan, with Tesla and Apple, with their stock splits. There's just so much to look at there in terms of the retail investor, how that impacts market structure. So it's curious to see if this will become a trend with the Nasdaq-100 companies to get more investors involved. Let's take a look at sector returns for the week. And as you mentioned before, seeing some of that rotation into financials.
Yeah, and I think, yeah, exactly. As you're looking through the week, you have industrials up over 7%, financials up 5.58%, you have energy up over 3%, materials up over 2%, and these are sectors largely, cyclical in nature, largely have come under pressure for the vast majority of 2020. And sectors that QQQ either has no exposure to or is significantly underweight relative to the S&P. So I think this kind of tells the story, and as we look at sort of individual days, it tells that story even further.
And Ryan, to wrap up here, your last couple of charts, you're looking at daily sector performance.
And this is it, right? I mean, I think when you're looking at performance for the year, and it's something that we talk about nearly on a weekly basis, it's information technology, it's communication services, and consumer discretionary. And as you look at the week, in the instances of discretionary and communication services within QQQ, those sectors were negative relative to SPY, where those sectors were positive, which kind of bucks the trend of what we've seen. Again, it speaks to the fact that I think given this week and optimism around this stimulus and hopefully a renewed economic recovery, you're seeing more interest in those value and those cyclical names. So as we're looking at individual dates, August 7th, you have financials, utilities, industrials, real estate all outperforming. Again, those are the sectors that QQQ is underweight. August 11th, same story, financials, industrials, both positive. You're looking at, on that day, information technology down over 2% and communication services down 1.77, with consumer discretionary down 1.7. So, I think at the end of the day, you're seeing just that rotation that you had alluded to. Some of the winners, some of those really great performers that we've seen over the years. Some investors may be locking in some of those gains and moving into some of those beaten up sectors, but today tells a different story. So we'll see what next week brings for us.
All right, Ryan, thanks for joining us as always on Trade Talks.
Thanks, Jill.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.